Right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics in partnership with UBA, of course. My name is Ugo Dre. I hope you guys have had an eventful weekend. How was your weekend and how was the past week? For me, it was a bit of a restful weekend after a very busy week where we saw the Naira make a strong rebound. I'm sure a lot of people are wondering what's going on. In case you don't know, the Naira went from like 1,750 to about under 1,6 in some places, especially in the parallel market last week. And that has been one of the best news that I have received in a while, right? In a while. So we're hoping this can be sustained. Central Bank of Nigeria announced that they had launched a new system, and that system called EFEMS is where FX is going to be traded now. So it appears that may have provided some kind of transparency to the FX market, and from the feelers that we're getting, it appears that there's a lot more supply than demand. And what happens when there's more supply than demand? Prices tend to go down. That perhaps is one of the reasons why we're seeing a much improved Naira. By the way, I did drop a video on my Nairametrics YouTube channel. You might want to go there where I try to explain what is going on and why the Naira is brushing the dollar last week. We hope that it can be sustained. Of course, we've been here before. You all remember back in April when the Naira even fell to almost 1,000 and everybody thought, yay, finally we're there. And all of a sudden, it just started going, depreciating again. So we hope that is sustainable. By the way, Decembers are usually very good for the exchange rate, especially the Naira. At least going by the last 3-4 years or so data that we have at Nairametrics. So it always seems like December kind of has the stable exchange rate. Some people say it's because of the Jackbada people or the IDGP. Like they say, I just got back, so spending dollars and all that. Some even attributed it to the Eurobond sale that just happened, which I don't think is the reason. But of course, I did try to explain why that has happened. So just go over to your YouTube app and then just search for Nairametrics, and of course follow, like, and click on the notification so that you can see more videos. We do have a lot of exciting videos on that channel now for you. All right, so we go into Follow the Money for the week. The Nigerian stock market concluded trading last week on a buoyant note as the all-share index surged, gained 0.72% to close at 98,210. Market activity, however, contracted in terms of volume. You do know that stocks are traded on the volume basis, and so we had 3.1 billion shares exchanging hand. Slight drop from 3.19 billion shares the week before. Of course, we had 33 stocks that posted losses last week, right? Compared to 46 stocks that posted losses the week before. In terms of stocks that gained, we had 51 stocks that gained last week compared to 32 stocks that gained. So there were more gainers than losers last week. I'm wondering, which stocks did you take position in? I did take position in one particular stock that I've been targeting. It's a Fuga stock last week, and I'm looking forward to exiting that stock at maybe 30-35%. You want to know what that stock is? You want to know? Don't worry, just follow me on any of my socials and you would know what that stock is for now. Yeah, so the week, of course, began on a pretty strong note. Monday saw gains. Tuesday was a little bit of dip. And then most of the gains that we achieved during the week was on Wednesday. In terms of the sectors that did pretty well, NGX Premium Index was up 2.88%. That's the index of the big boys. That gained 2.8%. Basically driven by a jump in Lafarge Africa. Lafarge, by the way, announced that they were one of their majority shareholders, Holcim, was exiting the company, and they had sold their stake to a Chinese company, and so that is essentially just made the share price surge as investors were looking forward to potential gain or upside from the deal. Meanwhile, the NGX 30 index, which is the index of 30 largest companies, was up 1.2%. In contrast, the NGX main board index dropped slightly by 0.39%. Of course, insurance index is soaring. Remember, I'd come up here and I told you guys the insurance stocks that were on my radar. I don't know if you guys took note of those stocks. Those stocks are doing pretty well at the moment. So if you're sharp enough to taking position, you probably will be smiling right now. I'm going to be talking about two of those stocks today, just doing like a versus, an FTM versus on those stocks. So you want to stay tuned. The NGX oil and gas index was also up 4.8%, and the industrial goods index up 2.5%. The banking index also gained 1.3%, driven mostly by Axis Bank, Fidelity Bank, and of course, our partner UBA. The consumer index also rose slightly by 0.13%. So overall, pretty good week for most stocks. So who were the main losers and gainers last week? So we're going to start with the major loss. The major losses was Len Africa, a penny stock, dropped by 11.75%. Aradel Holdings also fell as well by 10%. Aradel Holdings, I'm going to talk about as well on this show at some point. They also fell 10%, while eTransact rounded up the top three decliners. We had so many other decliners as well. There's Red Star Express, John Holtz, Dark Communications, Prestige, Howden McCall, which is a newly listed company. Vitafoam also fell, and of course the Initiate. So these were the stocks that kind of fell last week. In terms of the top gainers, now what was quite interesting about the top gainers was the least top gainer gained at least 16%. So that is not bad. I mean, guys, check it out. Like, how can I start getting 16% in 1 week? I mean, if you put that money in the bank, you're probably going to get 25% in 1 year. So it just shows you how stocks can be such a very, very good way of making your money work for you if you, of course, invest in the right stock and have the patience for it. And so Lasaco Insurance was that stock, gained 16%. Better Glass, one of my favorite stocks actually, gained 16.3%. I like the company. So Better Glass essentially does most of the glass and bottles that most drinks that you use today. They all rely on Better Glass for their bottling and their bottle caps and all of that. So that's what Better Glass does. Of course, AB Mortgage Bank was up 16.6%. That stock has been a bit volatile for some time now. It goes up and then comes down again. AfriPrudential was quite a surprise because this stock wasn't on my radar. So I was shocked when I noticed that it gained 20% in just 1 week. Interesting. Probably going to look into that stock and find out what is going on here. Why that 20% surge in a week? Is it a sticky surge, or is it a surge that will probably just fall away at some point? And Consolidated Hallmark Holdings also up 25%. Cornerstone also up 25%. Again, these are insurance stocks all flying high. I think there's something going on in the insurance space that is far from fundamentals. Looks like there's a lot of things going on there in that space, and we really need to pay close attention to those stocks. Of course, Secure Energy, Electronic Technology, I beg your pardon, up 27%, and of course Lafarge, like I mentioned, 27.5%. But the top two gainers go to Sono Assurance and Golden Guinea Brewery. Golden Guinea, did those guys still make beer? Golden Guinea was up 45.9% and Sono Assurance up 29%. So again, insurance companies have been dominating the stock market over the last few weeks. So for a lot of the money that has been made in stocks is actually being made in the insurance sector. The only problem I have with that sector, because in case you're reading this and you're listening, you're saying, "Oh, I should enter insurance like Nado." No, not that simple. The problem with them is that they don't have depth of liquidity. So you could take position in some of those stocks and start to find it difficult to sell when you want to sell because you might not find buyers. So that's the problem. But there are a handful of them that are not bad. Like, I have depth, and if you buy, you can make a quick buck and then you can sell. And there's some of them. And then even if you can't sell or you don't want to sell, they do pay dividends regularly, and their dividend yields is not that bad. So you just want to be sure of what insurance company you were going for. All right, so QTix Nigeria PLC. QTix is a cable manufacturing company located somewhere in Nnewi, Anambra State, and they've been on the exchange for quite a while. And this is a company, fully Nigerian owned company that has been running for decades. seem to be managed pretty well. It's a family-owned business as well, and has been there for a while. So they did report their earnings during the week. I think it was their Q2 earnings. Pre-tax profit 764 million for the period ended for a period between May and October to 24, up from 673 million the previous year. So that's a 13.6% increase. Um, Pre-tax profit year to date was also up 13.72%. Sorry, compared to what they did before. During the period reported, revenue was also up. Revenue surged 7.8 billion, up from 5 billion in 2023, and so we do have some of those numbers as well. Gross profit 1.3 billion, pretty much flat. Operating profit 605 billion, 605 million. I beg your pardon. Finance cost 151 million. Pre-tax profit 764 million, 30% year on year. However, earnings per share dipped significantly to 730 kobo. So what I mean, what's my take on Kutik? So I think that the share price also surged. I think it was one of those stocks that has been doing well share price wise. However, I kind of feel like there might be a need to raise capital at some point for the stock because of their debt balance. They have about 3 billion or so in debt, and by the time you compare that to their net assets, you might be expecting to see some kind of pressure or need to perhaps recapitalize or raise some kind of equity to pay down some of that debt. Now, and before we go to the second half of the show, just want to also touch on Consolidated Hallmark. Consolidated Hallmark Insurance also gained 20% last week, like I mentioned. This was a significant increase as well. Perhaps not too sure what is driving this, but the stock started the year at 1.47 and sold, and with a solid market volume of 259 million shares, but it has been gaining significant momentum over the last few weeks. And so November has already seen a surge of about 33%. For just this month, in the month of November alone, 33%, and in the 5 days of December, it's gained 20%. So Consolidated Hallmark is one stock that is firmly on our radar as well. Try to figure out why this stock is doing so well. It kind of might sound like it might be a bit too late to go into Consolidated Hallmark at the moment, but that's what we're seeing. The stock seems to be doing pretty well. So for those who own the stock, congratulations, your stock is doing very well. Hasn't been that bad for you for a bit. So that's it in terms of market wrap. When we come back, we're gonna look at NEM Insurance versus AIICO. Let's put their fundamentals together and figure out which stock is more interesting to own. And after that, if time permits, we'll also look at Seplat versus Aradel. We will be back. And we do this every Monday, 8 to 8:30, in case you're just tuning in for the first time. If you missed any part of the show or you want to just go back to any of our previous shows, you can go to our YouTube channel at Nairametrics at YouTube, and then you can find a lot of our previous shows as well. So, and a whole lot of other shows that we have over there at Nairametrics. You might want to check them out. Those shows are pretty interesting to watch. All right, so in terms of revenue growth, so I want to look at two companies, AIICO and NEM Insurance. AIICO is one of the oldest insurance companies we have in Nigeria, same as NEM Insurance, pretty old, but I think AIICO is a lot older than NEM. I still remember as a kid when I used to follow my mom to AIICO Insurance when she was going to like pay her insurance premiums or something, life insurance premiums, and it was interesting watching all those old guys back then, and that company still remains today, waxing strong. And so, but there are two of the interesting companies that you can always look at to invest in on the exchange. So, what has happened to both of them? So, we'll try to put them side by side to have some kind of comparison. So, in terms of revenue growth, AIICO exceeded forecast by 25% in the first 9 months of 2024. So revenue was about 76.98 billion. That's aggregate insurance revenue, which was up 64% year on year. That is AIICO. So what about NEM Insurance? So NEM Insurance exceeded its own forecast by 36% in the first 9 months of 2024. So they printed 69 billion in terms of revenue, and then aggregate insurance revenue was up 64%. So it kind of looks like these guys are neck and neck. But AIICO obviously surpassing NEM in terms of revenue. AIICO appears to be slightly bigger insurance company, one of the biggest actually out there, but NEM is coming in fast behind it. In terms of how their income is usually divided, investment income for AIICO was 24.8 billion. You all know how insurance companies all function. So insurance companies collect premiums from you. When they collect those premiums, almost like free money, they go and invest that money in different kind of investments so that they can make some good return. And then whenever there's a claim to pay, they now make claim payments from the money they've collected from you. So the bet is that the amount of claims that they make is less than the premiums that they collect from you. That's basically the business model. So if they're able to invest some of that float, so that those premiums is really called float. Premiums less the expenses that they use in getting that premium from you is really called insurance float, and that is one of the most valuable things on an insurance company's balance sheet. And so when they invest that float, they get what you call investment income. And that investment income is basically what makes an insurance company pretty thick. In fact, in most part of the world, insurance companies are the largest companies, and they're the ones who own majority stake in most companies. I mean, case in point is one of the world's most renowned investor, Warren Buffett. So Warren Buffett, most of the money he uses to invest comes from some of his insurance companies, especially Geico, one of the biggest insurance companies in the world. So Geico has significant amount of float, and it's that float that Warren Buffett usually uses to own stake in several companies. And then when those companies pay dividend, that dividend is what now comes back to the insurance company, and then some of it he uses to pay claims whenever claims arise. So it's the same kind of model here. It's just that we don't have insurance companies that are as big as you have, abroad. Nevertheless, AIICO Insurance came in with 24 billion in terms of its investment income. However, most of the income was supported by FX gains, and from what we've seen, FX gains was 11 billion. Makes you wonder whether the federal government will be looking at the direction of insurance companies as well when it comes to FX gains, and after they've gone after banks. I hope not, by the way. Anyway, they did 24.8 billion this year so far. If you compare that to NEM Insurance was doing 2.9 billion. FX gains component of that was about 308 million naira. Now, in terms of profitability, who do you think is doing better in terms of profitability? Well, pre-tax profit for AIICO was 13.6 billion, 41% up from its forecast, and 133% up the year before. However, a loss of 2.4 billion in core insurance operations as it spent 103 of its insurance revenue on claims and expenses. So what that essentially means is that in terms of the insurance business, as the premium collected less claims, it may have boosted a loss, but because its investment income is strong, it did end up posting a profit. So the challenge with AIICO has always been size and being lean and being able to function very efficiently. The company has undergone a lot of reorganization in the last few years, trying to be a bit leaner and more nimble in the way they operate. Seems to be working, but not that easy trying to turn around such a big insurance company. Contrast this to NEM Insurance. NEM Insurance is posting a pre-tax profit of 15.7 billion, 50% up from forecast and 168% year on year. So in terms of its own insurance business, it did print a profit, right? And then spent 70% of the insurance revenue on claims and expenses. So as you can see, even though AIICO was posting a higher revenue compared to NEM was posting higher profit, pre-tax profit that is compared to AIICO. So again, NEM seems to be doing slightly better when it comes to profitability. Now, in terms of share price performance, AIICO has gained 50% so far this year in terms of share price performance. 54% return, why um, total return, I beg your pardon, why NEM has gained 34.9%. So it seems like AIICO seem to be doing better when it comes to return on for share price. So if you are, or if you've been an investor in AIICO this year, then you're probably smiling to the bank more than anything else, because they seem to be doing a lot better than of course name insurance when it comes to investors. So which of these ones do you own? Do you own AIICO, or do you own name insurance? So regardless, they're still both doing well. I mean, those numbers don't look that bad if you ask me. It's just that in terms of when you compare both of them, you might seem like one is doing better. NEM, for example, is still priced at 9 naira. Took up. I still remember NEM was like 2 naira or so. I still remember pretty well. AIICO is still quite lowly priced at 1 naira, 22 kobo per share, in case you're looking for which one you want to buy. Now, in terms of dividend yield, um, I, dividend that is paid divided by the market price. I think NEM has a dividend yield of 7%. Not sure what AIICO's dividend yield is, because it appears they may not have a paying dividend as well. So in terms of which of these shares is expensive, I think they're both cheap. Price to book ratio, they are trading at below 1. So when stocks trade below 1, their book value, they're pretty cheap. So they're both trading below 1, their book value. So which one do you think is the preferred in terms of the stock? Well, investors appears AIICO might be targeted more at growth investors, good focused investors, because of the sort of riskiness of the business. While NEM looks like it's positioned for people who just want to be sure that a company can pay dividend. All right, so that is it for NEM and AIICO. Which one do you prefer, NEM versus AIICO? I basically reeled them out. So what if we go into Seplat versus Aradel? Let's see if there's time for that. So Aradel is a newly listed oil and gas company. It was listed just a few months ago and catapulted straight into swoot. That stock's worth over 1 trillion naira. So it's also what the value is in billions of dollars as well. One of the largest oil and gas companies. But before Aradel was Seplat. Seplat's always been the flag bearer of the oil and gas sector. One of the largest indigenous upstream oil companies in Nigeria that has been listed. And so we also decided to do a versus for these guys. And so let's quickly go into that. So revenue for Seplat was up 124% to 1 trillion. By the way, Seplat does report its revenue in dollars and then translate them to naira. So we're just going to be looking at naira version. Whereas Aradel was doing 377 billion. So obviously Seplat appears to be a much bigger company from a revenue standpoint. In terms of profits as well, pre-tax profit was up 161% in 9 months for Seplat, while it was up 29.29% in 9 months for Aradel. Seplat seems to be doing better as well. In terms of debt, Seplat is running with a debt of about 1.1 trillion, while Aradel debt is slightly under 100 billion. So it appears Seplat has a lot more debt than Aradel. But in terms of ability to pay down the debt, Seplat has an interest coverage ratio of 8.1. So it means Seplat can actually repay their debt faster than Aradel, Aradel actually has 15x. Aradel actually has a lot better chance of paying down or servicing their debt compared to Seplat. So here's what's interesting. So as much as Seplat has much better revenue, in terms of market cap, Seplat is at 2.6 or so trillion, while Aradel is at 2.2 trillion. So it makes you wonder whether Seplat is still undervalued, despite Seplat doing pretty well this year in terms of valuation. Price to earnings ratio 19 times for Seplat. Remember what I told you guys, price to earnings ratio once is below 1 or below 2 is pretty cheap. So imagine at 19x. So very expensive stocks. And the reason why it's also 19 or this high is because I think investors expect them to continue to grow their profits. And so Aradel is at 15x. So share price of both companies difficult to compare because Aradel just got listed recently. Of course, in terms of dividend as well, Seplat has always been paying dividend. In fact, Seplat even pays dividend twice a year. Aradel just got listed, so we'll wait and see what happens. So, two strong oil and gas companies listed on the exchange. I think that these companies are likely going to continue to do well. So, if you don't have them in your portfolio, you might want to do your research as well and see if there's a stocks that you are considering joining in your portfolio. All right, so we do have a little bit of information to share. At Nairametrics, we recently launched a dividend tracker. So if you're somebody who is looking to track your dividend and you want to know how well, how much dividend you're likely to get from any stock that you own, and you want to compare it to the dividend that you received from that same stock last year or any stock at all, pretty easy. Just go to Nairametrics dividend tracker. I think it's dividend .nairametrics.com, and then you can easily find all of them. It's just a very well done portal for you to check your dividend. I think it's dividends with an S. Let me see. Let me try that as I'm talking. Dividends with an S. Let's see if that works. So dividends with an S. So dividends.nairametrics.com, and then you can see all of it. Just pretty easy for you to use. And of course, we do have a slew of other platforms as well, not just nairametrics.com. You can also try Nairalytics. So Nairalytics essentially is just our website where we have macroeconomic data. So if you're somebody who works in a research company and you're looking for Nigerian data that has very good charts and in a way that you can use, then you want to try Nairalytics. All right, so finally I want to end with a new tracker that we're launching at Nairametrics as well. It's going to be called NMX 50. We were going to create the 50 largest companies in Nigeria, right? Almost like Fortune 500. So 50 largest companies in Nigeria. A lot of work is going on that at the moment, and that's going to be launched early next year. So look out for that. The 50. You're going to be surprised with some of the names that you see here, like the 50 largest companies based on a number of parameters that we'll put together. All right, so that has been Follow the Money today, December 9th, 2024. I hope you did enjoy this particular episode. Until we do this again, do have a profitable week ahead, and we look forward to a stronger Naira this week. I hope Naira falls, strengthens below 1,500 Naira to the dollar. That's Follow the Money for the week. Do have a positive week. Goodbye.